Last year, I analyzed more than 1,500 structures on Forex, gold, crypto, and indexes. In this video, I prepared for you the list of 5 elements of a perfect support and resistance, and I will teach you how to identify the strongest structures. As always, remember that the best key levels are always on a daily. So all the structures that we'll discuss in this video will be strictly on a daily time frame. Element number 1. Clear historical significance. The structure that you spotted should act as a significant historical support or resistance. Here are the important structures, the supports and resistances that I spotted on $CAD on a daily. Please note that all the structures were important for the market participants in the past. And in the past, from these structures, we saw strong bullish or bearish reactions. Element number 2, the psychological significance. The structure that you identified should match with round numbers. And now what I did, I underlined the psychological levels, the round numbers. And please note that all the structures that we spotted match perfectly with the psychological numbers. For that reason, for now, we keep all the structures on our chart. Element number 3, confluence with other technical indicators. The best structure should align with other technical tools, such as the technical indicators, the Fibonacci's, or the trend lines. It will increase the probability that the structure will be respected. When you need to check the confluence with other technical tools, first check the trend lines. And analyzing the price action here, for now I see just one trend line. This one, you can see that here we have a major falling trend line, and you can see that that trend line matches perfectly with that resistance 1. Traders, if you want to learn how to trade, if you want to see how I trade live, if you want to see how I analyze the market live, do not forget to check my premium educational group. For more info, check the link in the description below. After that, check the Fibonacci confluence, and in order to do that, simply draw at least 2 Fibonacci retracements. First retracement that we will draw will be based on that entire bullish movement. From its low to its high, we draw the Fibonacci retracement levels. And here I have 382, 005, 618, and 786. And we need one more impulse, so we will take this important bearish rally from that high to our current low. So we have our Fibonacci's on the chart, and your task is to look for the structures that match with one of the Fib levels. We will keep the support 2, because from support 2 this bullish rally initiated, and one Fibonacci level is lying there. We will also keep the resistance 6, because it is the completion point of that bullish impulse. And you can see that here we have the 0 Fibonacci level. We will also keep the resistance 3, because the resistance 3 matches with 618 retracement and 382 retracement. We will also keep resistance 2, because it matches with 05 retracement. And we will keep, of course, the resistance 1, because it matches with 618 retracement and the falling trend line. So here is our updated chart, and you can see that a lot of structures are already removed. Element number 4, the volumes. The structure that you spotted should experience high trading volumes. It will indicate the high participation and the interest from the market participants, especially the smart money. On the chart, I added the volume indicator, and on the volume indicator there's also the moving average, that blue curve. We will need that moving average because we will consider the volumes above the moving average to be the high volumes. It will signify for us the high activity of the market participants. Now let's check how the market reacted to our structures. First, analyzing how the market reacted to support 2, we can see that when the market was approaching that and testing that, we got a volume spike above the moving average. So we will keep the support 2. Now the resistance 1, you can see that it was tested by the market multiple times, and each time we saw the volume spikes. Resistance 2, same thing, we got strong bullish reaction here, and it matches with the volume spike. Resistance 3, right here we have multiple reactions, multiple price fluctuations, and again each time we see the volume spikes. Resistance 6, the last resistance. And here it was tested. And when it was tested, again, we got the volume spike. So we will keep all these structures. Element number 5, multiple touches. The more the better. When you're looking for the strongest structure, make sure that you identify the one that was respected by the market many times in the past, at least 2 times. Now let's analyze how many times each structure was tested. Our support 2 was tested just 1 time. So that structure we will remove from our chart. And the same thing is with the resistance 6. Again, the structure was respected just 1 time and we have just 1 bearish reaction from that. Resistance 3 was very important for the market participants in the past. And many times it was respected. So we will keep that on the chart. Resistance 2, only 1 time. According to our rules, that is not the best structure. And resistance 1, a lot of times that structure was respected by the market participants, so we will keep it. So when we started, we got 8 structures, 8 important supports and resistances. And you can see that now, after the analysis, we have just 3 structures, 3 resistances. And for us, these structures will be the strongest ones, the best ones. That checklist will help you to identify the strongest structures, the structures from where strong bullish or bearish movement may initiate, and from where you can make very nice money. If you want to learn how to trade, do not forget to check my premium educational group, the link in the description below. Traders, thank you so much for watching, and do not forget to check my other videos.